of the risk-based lending that the Central Bank of Kenya gave a green light to as from March 2022. Data by the Central Bank of Kenya indicated that the average lending rate stood at 12.35% in July, which is the highest rate since November 2019, when it stood at 12.38%. Edwin John Mukora investigates.
After sustained push from the banking industry to have greenlight to lend based on the potential risk of each borrower in the Kenyan economy, the impact is already being felt in the sector. July ended with a lending rate at 12.35%, which is the highest since November 2019. Since 2020, banks were pushing the Central Bank of Kenya to approve their risk-based lending models. As of March 2022, 6 commercial banks already had their models approved.
Banks were initially operating under an interest rate capping. There was a regulation which had been done back in 2016 which capped interest rates. And the idea was that that particular capping would facilitate availability of credit in the market, but it was not well informed as far as economics are concerned. So what happened is that since banks felt that they had been capped and the prevailing market was not favorable, most banks were simply lending to the government as opposed to lending to consumers. So what happened is that we had tight liquidity in the market because most people in the market, particularly SMEs, could simply not access credit from banks, because banks were like, if someone is high risk, why would I lend to them? Let me make a safe bet with the government. But along the way, because that particular piece of regulation was not sustainable, there was a reversal. But then again, what happened is that the CBK, because there was a feeling that if there was a radical shift in terms of the base lending rate, then it would send shockers into the market, in that there would be a very abrupt rise in interest rates as far as lending is concerned. And